Wave. Let's run it through its paces.
June 2025. Has anyone figured out a solution to the payroll? The payroll system has completely fallen apart. Reset to a setup state, history missing. The user switched to a competitor and processed payroll the same day. 1 month later, a payroll partner transition shuts the service down entirely. Support unanswered for weeks. 4 months before that, a different user waited 48 days for support to resolve a payroll problem. They gave up and calculated the taxes manually. 3 incidents across 5 months. The free accounting works. The paid services that sit on top of it break in ways that create tax liability for the business owner, and no one answers when they do. Wave, founded in Toronto in 2009. Acquired for $405 million in 2019. The founding chief executive left in 2023, a free product owned by a consumer tax company. The basics work. The ceiling arrives faster than expected. Kirk Simpson and James Lochrie founded the company in Toronto in 2009 with a thesis that was both simple and disruptive. Accounting software for small businesses should be free. The revenue would come from payment processing fees and payroll subscriptions, rather than from the accounting product itself. The model made sense. The platform earns money when users earn money. Processing fees scale with the user's revenue. Payroll subscriptions add a predictable stream. The free accounting core is the acquisition channel. The paid services are the business. In June 2019, a major consumer tax company acquired the platform for approximately $405 million. The stated rationale was expansion from consumer tax preparation into small business software. The free core remained free. A tax advisory service was integrated into the ecosystem. In February 2023, the founding chief executive announced he would step down. He left at the end of June after 12 years. The company that began as a Toronto startup is now a business unit inside one of the largest consumer tax operations in North America, led by appointed leadership. Whether the parent company will continue investing in the platform, sell it, or fold it into broader tax services is a question the community has been asking since the acquisition. The answer is not yet clear in 2026. The payroll failures are the most damaging pattern in the research period. The June 2025 reset, where the payroll system returned to a setup state with history missing. The July 2025 partner transition that shut payroll down entirely while support went unanswered for weeks. The February 2025 case, where a user waited 48 days for resolution and eventually calculated the taxes manually. For a small business running payroll for real employees, these failures create tax compliance exposure. The business owner bears regardless of which software caused the problem. The account suspension pattern mirrors what the payment platforms in the previous comparison documented. April 2023, a payments account approved then blocked without explanation. June 2025, an account suspended by the risk team with no advance notice. Invoices unpaid for 5 to 6 weeks. April 2024, an account suspended with the only contact path being an email address for suspended accounts. The free tier support infrastructure means there is no escalation path when a suspension occurs. No phone line, no dedicated support, an email address, and a wait. The bank feed reliability is the operational concern. Chase and Capital One connections dropping repeatedly in 2023, Plaid connection issues in 2025, random disconnections documented into 2026. The same bank feed instability documented for the Cloud Challenger in this comparison appears here, with less support available to resolve it. For a free product, the bank feed reliability determines whether the cloud accounting promise works or whether the user returns to manual entry. The free tier provides real accounting capability, unlimited invoicing, bookkeeping, receipt scanning, payment collection through the integrated payment processor. For a sole trader or freelancer with simple books, the free tier handles the core workflow without a subscription cost. The paid tier adds automated bank imports and transaction categorization. The distinction matters because automated bank feeds are what make cloud accounting practical. Without them, the user manually enters transactions, which is the workflow cloud accounting was designed to eliminate. The accounting depth is limited relative to the other platforms in this comparison. No native inventory management, reporting less detailed than the incumbent or the cloud challenger. The integration ecosystem is narrower. No multi-currency accounting comparable to the cloud challenger's offering. The product is not trying to compete with the incumbent's depth or the cloud challenger's international capabilities. It serves the micro business whose needs are invoicing, expense tracking, and basic reconciliation. The long-term platform risk is the strategic concern that no feature comparison addresses. The product is free. The parent company is a consumer tax operation. If the parent company changes strategy, sells the platform, or discontinues it, every user needs to export data, migrate bank history, and move payroll records to another provider. The community has asked whether the platform is going out of business. The answer as of 2026 is no. The question persists because the strategic fit between a free accounting platform and a consumer tax company has never been fully articulated. The recommendation for every user is to treat the platform as an operating tool rather than a permanent archive. Keep data exports current. Know which platform to move to if the migration becomes necessary. Someone who is a sole trader, freelancer, or micro-business owner with simple books and no employees should start with the free tier. The invoicing, bookkeeping, and receipt scanning handle the core workflow at zero cost. The product is real software. It is not a demo or a trial. For the user whose accounting needs are limited to tracking income, recording expenses, and sending invoices, the free tier eliminates a cost the other platforms in this comparison charge for. Someone who needs automated bank feeds should evaluate whether the paid tier's bank connection reliability meets the requirement before committing. The documented pattern of disconnections across major financial institutions means the feature that justifies the paid subscription may not work consistently. Test the connection with the primary bank account before relying on it for daily reconciliation. Someone who needs payroll should not use this platform in its current state. The documented failures across 2025 are not edge cases. A payroll system resetting to setup state, a partner transition shutting service down, 48 days without support resolution. These are structural reliability failures in a service where compliance consequences are borne by the business owner. The payroll capabilities of the incumbent in this comparison are materially more reliable for United States businesses. Someone evaluating whether free accounting software is sufficient in 2026 should understand the trade-off clearly. Free eliminates the subscription cost. The cost that replaces it is narrower support, less reliable bank feeds, no native payroll that the research validates as dependable, limited reporting, and a platform whose long-term strategic direction under its parent company is uncertain. For the micro business at the earliest stage, the trade-off is reasonable. For the business that has grown beyond the micro stage, the trade-off favors paying for software whose support, reliability, and depth match the complexity of the business. The thesis that Kirk Simpson built in 2009 was correct. Small businesses should not have to pay for basic accounting software. The free product delivers on that thesis for the user whose needs stay within its boundaries. The paid services carry risk the free tier does not prepare the user for. When the payroll resets and no one answers for 48 days, the free accounting is not what failed. The paid infrastructure is what failed. Free is a starting point. Whether it remains sufficient depends on whether the business outgrows the ceiling. The accounting works, the support does not. The payroll is not reliable. The strategic future is uncertain. For the freelancer with simple books, none of that matters today. For the business that grows past that stage, all of it matters immediately.